Microsoft out of favor this morning. A lot of investors think, or seem to think, that sure, this is a fairly stable tech stock. They've got a lock on business software, for example, around the world. Those shares sliding 11%. Let's get more from Rishi Jaluria, IT equity research analyst at RBC Capital Markets. Rishi, thanks very much for joining us. Why do you think investors are displeased with Microsoft today?
Yeah, no, thanks so much for having me. Look, I think we're in a very fickle market. I think we took a step back. This was a solid earnings report. If you had told me that Microsoft would be trading at 22 times GAAP earnings and maybe lower than that with today's pullback and put up a quarter like this, I would have thought the stock would be up. Now, I think there's two things that maybe are weighing on investors here. Number one, the Azure growth in the quarter was, I thought, solid, but maybe it was a little bit light of what people expected, and it did show a point of decel. Now, they remain capacity constrained, and they definitely signaled that overall Azure growth would have been meaningfully higher if they were actually at parity. And then the second thing is now they're talking about raising capex, right? Because, well, how do you get out of being capacity constrained? You have to build more. And so the capex numbers are going higher. And I think as we've seen in this market, investors don't particularly care for that mismatch between we have to invest now and the revenue will take time to actually be generated. But I candidly think this is creating a good buying opportunity for us.
It's really amazing. I mean, Azure posting a 38% revenue increase during the quarter. Investors really are looking for exponential increases here, aren't they, in business?
I think that's right. I think with everything going on AI and all the spending, investors are looking for accelerating growth. And in this environment, let's take a step back. That's $9 billion of Azure ARR added sequentially. That is a really high number, especially when you're capacity constrained. But I think in this sort of market, it just tends to be very one number or very short-term focused. And again, I think for those of us that are willing to be long-term investors and think through the long-term TAM opportunities, you can look through the noise and there's a lot more to like in the earnings report.
They are pretty involved with OpenAI. Is that a worry? Because there's been concerns about OpenAI's debt and heavy spending, for example.
Yeah, look, I think there's two pieces here that I think are really important. So number one is they did tell us in a new disclosure that OpenAI represents about 45% of commercial RPO, and RPO being kind of a good measure for future backlog, future revenue to be recognized. But they also are not including all of OpenAI in there. They're effectively saying, look, we're risk adjusting this, and the longer the duration, the more kind of risk adjustments they're making. So I think they're being pretty conservative with what they are including in that backlog number. Well, the second thing, which I don't think is super well understood by the market, is all of these applications that, by the way, they're showing some really good signs of early traction with, be it Office Copilot, GitHub Copilot, Security Copilot, Dynamics, et cetera. All of these AI applications are built in a modular manner that is not entirely dependent on OpenAI. In fact, you can use Anthropic models under the hood. You can use open source models, be it Llama or Mistral. And so as a result of that, Microsoft's fortunes are not entirely dependent on OpenAI. Obviously, they have kind of a good situation with OpenAI where they have research rights till 2028, IP rights till 2032, exclusivity of the OpenAI API. But their future fortunes are not dependent on OpenAI, that if OpenAI doesn't quite do as well, and by the way, with all the noise around the model provider, they're still one of the cutting edge frontier model providers along with Anthropic and Google. But if they really just don't go to the level that I think people want them to, Microsoft can still succeed.
Essentially, I'm not sure if you saw this story. I think it's only Forbes are reporting it right now. OpenAI is supposed to be working on a new social network that will only allow people on board using biometric identification. Bots can't get in on the act.
Yeah, no, look, it's interesting stuff. I think one thing that maybe differentiates OpenAI as a company is they're making a lot of very big bets in every area, right? They are not only a model provider. They're trying to build, domain-specific agents. They're getting into healthcare. They're talking about consumer applications. Now you have, social media. There's, they're talking about getting into the advertising game. They're making a lot of very, very, very big bets. And, candidly, if this is a company that aspires to be the largest company it can be, you need to make all those big bets. Some of them may pay off. Some of them may not. Some may have mixed success. In many ways, it kind of reminds me of Microsoft, right? Microsoft did get into social media. They bought LinkedIn and they made LinkedIn a much bigger asset than it could have been. They're obviously huge in enterprise software. They're in infrastructure. They're in security. They're in developers. They're in gaming. They're in search, right? I mean, very few of us use Bing, but it's actually a huge, huge business. So, it kind of reminds me of that in a certain way. And, look, I think it brings up a good point that as we have to figure out how do we differentiate what is actually AI versus what is human, and that line is getting blurrier and blurrier by the day. Ways of having verified content, verified actors, I think will become increasingly important.
And you would be a buyer of Meta right now, of Microsoft, I beg your pardon, and your target $640 US?
I think so. Look, I think I would take huge advantage of this pullback. The market seems like it's being candidly pretty irrational on Microsoft right now. Lots to like out of the quarter, strong Azure number. And again, they're being, I think, conservative with a lot of their stuff. And then you saw really good success out of Microsoft Fabric, hitting $2 billion of ARR less than 2 years after being introduced onto the market. Good signs of early traction with M365 Copilot. GitHub Copilot remains strong. I think there's a lot to like here. By the way, they're preserving margins in spite of all of this spending. And to get that at 22 times GAAP earnings, this candidly seems like a gift to me.
Thank you very much, Rishi. Really appreciate it. Rishi Jaluria, IT Equity Research Analyst at RBC Capital Markets.